Jairam Sampath, Whole-Time Director and CFO of Kaynes Technology is with us on the show today. Mr. Sampath, good having you. Thanks for taking the time out. And what's happening in your space and what you are managing to do as well within that is quite exceptional. Please lay out the landscape for us, Mr. Sampath. How do you foresee 2025 to be on the back of what has arguably been a very strong Q 2024? I'm assuming here that your Q3 FY25 or Q4 2024 is also going to be a strong one.
Yeah, thank you for having me here and good morning to all of you. I think your colleague has stated all the summary better than what I could have myself stated. So I think you have all the facts.
We'll pass on the compliments to her.
Yes. So you have all this, I think facts are there and so on. See, fundamentally our company has been always thinking about, if you go back, way back and look at our red herring prospectus when we listed about a couple of years back, we had listed out a few areas that we were actually working on in terms of futuristic areas. Of course, those days details were not available, but I think we are pretty much coasting along on those lines. And of course, with a little bit of help, rather a lot of help from the industry tailwind in terms of demand, which is basically the primary more of any particular, let's say, prospect for any company. I think we have done well, and I think we continue to hold the view that the tailwinds will improve. And over time, I think company also has to keep looking at, let's say, next 5 years and beyond. So one of the things that we always, let's say, address ourselves to is to face what are likely to be the, let's say, changes in the technology front, changes in the, let's say, marketing front, and what are the likely headwinds that you may encounter after 5 years. So this way, what happens is we generally are prepared for the headwinds before they come in, and then we kind of open out new beachheads. So far, next 5 years up to about FY28, our story is basically posting along on the indigenization program of, which is in a large measure pushed by the government, saying that make in India for consumption in India, which is the Atmanirbhar plank. And over time, I think with a little bit of investments of capex, etc., and we have also expanded into other areas like semicon and PC board. So we kind of have deepened our value footprint in the entire ESDM sector. We wanted to be an integrated player, and we are taking steps in that direction. But in addition to that, I think we have also now, you mentioned about Sensonic. It's an interesting beginning we have made in acquiring technologies which makes us an original design and manufacturing player of some significant stature. So in future, obviously, we are looking forward towards adding technologies which we may not be able to organically develop. So we may have to acquire these technologies from areas which are available, like in Europe, there are many companies available today, wherein they have good technology, but maybe no backers to kind of develop it. So we are giving ourselves a few years time frame to develop businesses on these areas. Sensonic is just but one example of this. Similarly, we are also, last year we had made a small experimental, let's say, acquisition in the US, Digicom, and we are very encouraged by all the RFQs that are coming in, etc. So obviously we will pursue our course there too. Geography addition is an important aspect of our strategy. And third thing is we always look at, now more than ever before, technology has become a key differentiator in companies' offerings, actually, any company's offering. So earlier there were other business-related reasons and some arbitrages, etc. But today, I think with the world kind of almost becoming a level playing field, companies which work on technology, and technology does not come in short term, right? You have to work towards getting your act together and then lead in technology. So I think that is going to make the differentiation, and that is the what I call today is Kaynes 0.9. And when we reach $1 billion by FY28, as our founder promoter has set a target for us, so that will be Kaynes 1.0. But then Kaynes 2.0 would have a lot more of a different play, in the sense we would be a deeper technology player. We'll have more ODM with us.
No, so in light of that, let's Mr. Sampath, hi, Tamanna here, and
right.
let's come back from FY28 to now before we get to the broader outlook, of course. And let's talk a bit about Sensonic. And you mentioned briefly that it gives you cutting edge technology for the railway segment largely. What is the sort of contribution to revenue that you see from Sensonic? How is it changing things for you?
Yeah, so as far as our current, let's say, targets for FY28 is concerned, we have not considered any of the new initiatives to be adding anything to those targets. So we are looking at, let's say, the $1 billion that we talked about is contributed to by the existing business, which is in the MS space, plus semicon assembly space, and then PC board space. So these other businesses that we are talking about, we are giving ourselves 2 to 3 years time frame to kind of develop it into something which can be then grown for the, like I said, the Kaynes 2.0. So beyond $1 billion, still the company would like to imagine that there is still market available. But only thing is we need to prepare for it ourselves now in terms of all of these additional capabilities so that we can continue the growth path the way we have been growing, let's say, in the past few years, and then we continue to grow like this, beyond FY28. So as far as Sensonic is concerned, let me tell you why is it that it's cutting edge? Because it is one of the significant ODM platforms that we get. That means it's railway network safety related new generation, let's say, design and IP. And they already are working in 4 countries, that is India, Austria, UK, and US. And we'll augment their work, and they are working with some of the OEMs too. So it's kind of a different play than earlier. Earlier, we used to have our own design teams doing some design, etc., and customer will give specs, etc. But this one will kind of catapult us into a different stature altogether in terms of solution provider. So you can say roughly, so these are all hundreds of crores of businesses every year, and these are all businesses wherein you would not have too much of, let's say, cost pressures, because this is based on IP. So we think that it will be margin accretive. Say by FY28, we certainly should get some
by FY28, it will be margin accretive by FY28, you're saying?
Yes, maybe you can start seeing results from FY27 onwards itself.
Okay.
Then I am not able to give you a number right now, but it will be something significant.
Yeah. Now, just one last question very quickly, sir. EV, of course, is the big bet for Kaynes Technology. And the current sort of concerns in terms of sales at core passenger vehicle sales, I'm talking about at its retail front, are you seeing some of those headwinds back up for you as well? Are you seeing that playing out as the core demand starts to become a bit of a concern?
Yeah, Tamanaji, I think that is something that we always take it for given. So we work in several areas, 6 verticals, and really industry, if you go to industry sectors, about 10 sectors. So it's always likely that some or the other sector will face headwinds. And that's the nature of the economy. So electric vehicles, for instance, was a growth engine for, let's say, last year and so on. This year, it's a metering business, a smart metering business, and next year it will be aerospace, and the year after that will be railways. So we always have an alternative, let's say, alternative industry tailwind aiding us whenever there is a headwind in a small sector. But overall, in the economic front, I think we are doing pretty well. We don't see any problem in reaching at least the $1 billion mark in FY28. But however, we need to be alert about these changes, because we need to also manage our working capitals, and we should not exert in inventories and so on. So we have to be worried about it. But at the same time, there is compensation too. So in electric vehicles, it's not just the 4-wheeler and 2-wheeler that we manufacture things for. We are also into charging infrastructure. We are also into components business there. So slowly, those are also gearing up, and some of them are global businesses. So so overall, maybe it is not as strong as one would expect it to be. But then we were always clear that electric vehicle, we always club it along with industrial and not with automotive, because it's yet to become a primary mode of, this is like a first buy for people. Maybe 2-wheelers in some extent has become. 4-wheelers is still out there, right?